Silicon Valley Bank imploding, getting seized by FDIC. Here's the interesting fact before I click the intro. If you had invested $1,000 into $220 puts on Wednesday for Silicon Valley Bank, by Thursday afternoon, you would have made $11.8 million. So that is 180,000% gains in one trading day. Yeah, that's ridiculous. And if they had allowed trading today, it would have been even more. It probably would have been close to 2 million% gains in 2 days. But yeah, so, and there was another super chat that I missed. Jimmy D, Vic's rub skin weasel on Spy's no zone today. Monday crash. Yeah, it was interesting. Like they stopped trading. Oh, there it is. There's the fight. She got her bed back. Monkey, leave the cat alone. Take your bed. Take the victory. Take the victory, monkey. Come on. So pre-market, Silicon Valley Bank, SVB, went from $30 to $104 at like 6:30 a.m. or whatever. And then they just said, no trading today. So it screened back up, got seized by the FDIC. And so whoever bought shares, I think, is now bag holding essentially a pink sheet Q stock. Absolutely bonkers. So trying to piece together sort of what happened is it sounds like they had a whole bunch of fixed term debt or lending that they did. So they're holding these bonds and they're fixed, low interest rate, fixed for a long period of time. And because their interest rate is below that of inflation, no one wants them, right? Because why would you buy debt that has a 1% return when you can buy debt that has a 4 to 7% return right now? Like, so the value of that 1% return just vaporized, and something must have come due where they needed some cash. So they sold $1.8 billion of those securities at what sounds like a pretty profound loss, made the announcement. All the VCs and rich people started pulling their money out as fast as they can. Stock price went from $360 down to $60 in one day. And that was that. Poof. 97% of their holdings are in accounts that have more than $250,000 in it. So they're only insured up to $250,000. Anything after that, nothing. They have, the FDIC has asked people who have savings and checking accounts with Silicon Valley Bank to notify them, and they're going to try to get as much of the money back as they can. But again, the insurance only works up to $250K, which is, we've discussed this in the show before, that if you're going to have more than $250,000 in a bank, you should talk to the private banker, see what type of products they have where they can, make a dozen, 100, whatever accounts that all have $250K limits that all feed into one main account. That way you can get insurance across all of them. So I think we're seeing that a lot of folks might get burned really hard on this. I was reading that Silicon Valley Bank is pretty much the only bank that allows people who live in India the ability to do venture capital investment in the U.S. because you don't have to have a social security number to become a member of their bank or customer of their bank. And so there's probably a lot of South Asians in India right now who perhaps were doing a lot of investments in U.S. venture capital companies and tech companies that now, poof, that capitals might be gone. That's rough. It sounds pretty gnarly to me. I don't, and there's it sounds like there's a lot of banks who've invested in the similar long-term debt stuff that Silicon Valley has, and that this contagion is now like spreading to a lot of these other regional banks that are in similar situations. Yeah, but they stopped trading this morning before open. They're like, nope, not going to trade. FDIC seized. And all the other banks kind of, trade sideways for the day, which I found really interesting, because if there's a contagion going on and this bank just got clobbered in one day from that contagion, and a bunch of other regional banks may be subject to it while the sideways trading. It seems to me that, they're just as doomed as everyone else. Jimmy D, holy hell, emergency closed Fed meeting Monday 11:30. Which bank will be sacrificed to the gods? That is a good question, because the last time they did one of these emergency meetings, they invited everybody except Bear Stearns. And basically they discussed how they were going to murder Bear Stearns and who was going to take on their liabilities and assets. And Jamie Dimon of Chase was like, I'll take on their assets. Government, you take on their liabilities. And the government and the Fed was like, sounds good to me. And that's what happened. That week, they just murdered them. Their stock vaporized into nothing. And the entire time, Jim Cramer was like, Bear Stearns is strong as hell. And he just announced today that JP Morgan is a fortress. So who's got their money on JP Morgan? 8 days ago, he said SVB was one of his top 10 hottest performing stocks. So Cramer curse, inverse curse, seems to be playing just right here. So JP Morgan. Yeah. Bank contagion confirmed. Money over Mayo emergency Fed meeting has happening as we speak and stretching over the weekend, and they'll release results if they want to Monday. I wouldn't doubt if there's lots of talk going on. It's $200 billion in assets under management, 16th or 19th largest bank, depending on who you talk to. It's a pretty significant chunk of money to essentially vaporize. Who's going to take on those liabilities of all that debt no one wants? And who is going to take on the customers and the bank branches and all those things? FDIC's, they're usually pretty good at getting someone like, you take on all this good stuff, we'll ship off the bad stuff over here. And banks usually like taking on the good stuff and not the bad stuff if they've got to do stuff. So if someone comes along and agrees to take on the customers and all that stuff for Silicon Valley Bank, then I think the customer accounts, they don't have to worry. But if no one wants to come along and take it on, then the customer accounts, they may have to worry. Michael Harrow, do you think hedgies, brokers, or regulators are going to whistleblow to save their own skins? Oh, hell yes. If you know your company is going down, right? That there's some malfeasance going on, they're hiding, cooking the books, whatever. Your best bet is to go to the SEC, file for whistleblower status, tell them exactly what's going on, because they will give you millions of dollars as a reward when they fine that company or arrest people or whatever. It's a great way to soften the blow, and they never announce who you are. So you can still get a job elsewhere in the financial industry because you aren't seen as the enemy. Or you don't have to, because they give you $7 million or whatever the fine reward is. You don't do anything.